Yes, friends, so we'll continue with the next session on the SA 705 modification to the opinion in the Independence Auditor's report. Okay, so before I proceed, I would like to have a recap yesterday what we had discussed. So we started with the SA 700. The concept number one is SA 700, which is very simple. Hardly one or two questions were there. Okay, primarily it talks about the elements. And if it is prescribed by law, if you have got supplementary information was important. Then concept number two was SA 701, which is talking about the key audit matter. It had three elements which is going to be considered if you are going to decide whether it is a key audit matter or not. You are supposed to communicate to TCWG because it's going to help them, it's going to help you, it's going to help the investors. So primarily you have got a significant audit considerations you have given for such areas. Okay, and it is not a substitute for modified opinion, going concern related things and your emphasis of matter. So this is what we had learned in principle. So we'll see one quick annual report of one of the HDFC bank, and let us see have they covered in the same fashion in which SA 700 has told or 701 has told. Okay, because they have given a clean opinion. So today we are going to cover 705. We'll talk about it a bit later. You see the heading, first it will start with the independent auditor's report. Then we have got the addressee. Then you said report on the audit of financial statements. Why? Because you are going to report on other reporting responsibilities you have got. So since you have got other reporting responsibilities, you are going to tell like this: report on audit of standalone financial statement. Start with the opinion. Opinion, we have got two elements. One, we have audited. That is the first element you are supposed to tell. Identify the financial statement components, what you have audited. Period, you need to capture. Okay, and notes to accounts. Then, in our opinion, to the best of information, according to the information explanation given to us, the standalone financial statements give information as required by the Banking Regulation Act or the Companies Act, as well as in the manner as required by the accounting principles or accounting standards, you can say, so that it gives true and fair view. Why? Because HDFC is a company. Companies Act also applies to them. But from accounting point of view, Banking Regulation Act applies. So they have to say true and fair view. That's it. Then basis for the opinion. Yes, we have conducted audit as per the standards as specified in section 143(10) of the Act, Companies Act. Our responsibilities are defined in the auditor's responsibility section. We are independent or as per the code of ethics of ICAI, and we believe that our audit we have obtained sufficient and appropriate audit. You see, no, across the world, any company, fantastic. See, no, pure standardization. But you have got a flexibility also. How? Because in the basis of opinion, you can say, like suppose you wanted to had a qualification, you can explain that qualification in the basis of opinion. But you see the words, I cannot change the English language also here. I have to tell the way they have told me. Okay. Now, key audit matters are those matters. See, it starts with the introductory section. Key audit matters are those matters that in our professional so and so. These matters were addressed in the context of our audit of the financial statement as a whole, and we do not provide a separate opinion on the matters. That's it. This is what was supposed to be told in the introductory section, and we have told it. Then we are going to provide a description of the key audit matters. See, what is that key audit matter? NPA. The bank is required to comply with the master circular. I think they must have given, ICA must have given this example from here only, I believe. No, because I had randomly taken, I didn't knew. Okay. So RBI Prudential Bank is also required to apply the judgment. Non-performing assets we have identified as a key audit matter. Our procedures including understanding of the processes, monitoring the credit, identification, testing of application, evaluation of the governance. Okay, I hope you are not. Okay, anyway, I'll share this report. So you can see that they have written, see there is one more key audit matter. This key audit matter is related to some scheme of amalgamation, something happened. Then one more key audit matter on the IT systems and controls affecting the financial reports. Yes, they have got three key audit matters. Other information as per SA 720 annual report related. They have told, see, annual report, they have mentioned. So we'll see that in 720. Then responsibilities of the management. They explained that board of directors are responsible for maintenance of the internal control, okay, going concern assessment, everything they have told. Ability to continue as a going concern. Then auditor's responsibility. First, there are three sections. First section, what is audit? Our objective is to obtain reasonable assurance. It is a high level of assurance and it is not a guarantee. What is materiality? Yes. Second section, how they did the audit. We have maintained skepticism and the professional judgment. We have identified the risk, obtained understanding of the controls, okay, check the management use of going concern, etc. Third section, communication, that we have communicated plan, scope and timing, we have communicated independence, we have communicated key audit matters, done. Okay, for the special purpose financial information of first HDFC. Okay, some other matter they have, okay, other matter paragraph. They have given some other matter paragraph, leave it. Then comes a report on legal and regulatory requirement. Okay, standalone financial statement have been drawn up in accordance with section 29 and section 30 banking regulation. We have obtained information, explanation, internal controls are good. Companies Act related section you have to quote now. Okay, we will see this, what they are supposed to tell as per the Companies Act. Later part we'll see. Then you have told about your partner's name, partnership firm, chartered accountants, firm registration number, and then partner's name, membership number, his UDIN, place, date. You see, perfect. And there is a joint auditors. There are two joint auditors, or PwC and Nissim and Co. So then you have got the annexure to the report. Okay, IFC and CARO. Yes, I hope students it's fine. You got connected with the concepts what we had learned yesterday. Yes. So today we will talk about SA 705. Okay, I'll give one small analogy to you. With this, you should be able to understand or try to connect to what we are going to discuss. Now imagine this is me, teacher, and this is you, and these are all your parents. This is a student-teacher meeting going to happen. Now, when the student-teacher meeting is going to happen, definitely your parents would be expecting to me speak something and not about the USA strategy and India's global oil position or global warming and all. When you are going to, your parents are going to come to talk to me, they may be expecting that I will speak something about the kid. Because I have been observing, I have been interacting with the kid. Now, let them expect whatever, okay, they may be having, they want to know the reality. What is happening, what the kid is doing, because we don't know. After going to school, we don't have any control over the kid. So they want to know what exactly is happening with the kid. They want to know the reality. So when they want to know the reality, I have got some expectation in mind. They must be having some expectation. So this is the expression. I want to express my opinion about the reality now. Because expectation I cannot change about the parents. But I can talk about the reality. What about the kid? Now you tell me, students, from your point of view, what you expect me to tell about to your parents? Definitely, you wish I say something very good words about you. Oh, I have never seen such a student. Fantastic, helping, okay, so much good. You feel very good, no? In fact, if I tell something bad about you, you feel very bad. Okay, at least parents will come to know what is happening. So I'm telling this kid is bringing crackers to the classroom, not listening, okay, troubling other people. See, they are like a qualifications. They are not clean opinion. So what type of qualification I might have issued? I can issue only 3 types of qualified opinion or modified opinion. One, I can say, this kid is fantastic, excellent, except sometimes they speak in the class. Then you feel very good because you told excellent, but that one small aspect has to be changed. So this is what we can call it as a qualified opinion, because we say that kid is very good. Second type of thing is very problematic. I say that adverse opinion. I have never ever seen such a kid in my life. What is this? What you're doing in the at home? Okay, how did you grow this kid? Like, I talk totally adverse thing. Okay, and the third thing I can say, like, this kid has never come to the school only. I say, I don't know anything about the kid. Now you tell me, students, is there any fourth opinion possible? See, one thing is I can give you a clean opinion. Fantastic kid, without any reservations, without any qualifications, which you have already discussed. When I will give that? When the student meet my expectations. So expectation minus reality is 0, then I give the clean opinion. Now when that my expectation is very high, you have far exceeded reality, that happens in real life, but in audit, exceeding reality also don't want, because we don't want overstatement also, we don't want understatement also. We want expectation to be equal to reality. Yeah, some, it is not that perfect. Some amount of plus or minus we will permit, subject to materiality, because we are not rocket science. No, it is all judgment based. Financial statement is judgment based, so I cannot have a perfect thing there. Now, how much can be plus or minus equal to materiality level? What I am going to fix. Second is, I have some reservation because you have crossed that materiality limit now. Because what I had some considerations about you, but you have not considered, you have crossed that threshold. No, that is, I say, excellent except. In the third case, no concept of materiality. You are pervasive, problematic only. In both the cases, either I know that you are problematic, or I don't know you are problematic, but I believe you must be problematic. I am going to give you this. Okay, now let us see this chapter, keeping this analogy in mind. Essay 705, modifications to the opinion now of the independence report. Now, there are 3 types of modifications. Qualified opinion, these are called the types of modifications. Adverse opinion and disclaimer of opinion, which you know already. So it is the essay 705 deals with the responsibility of the issuing appropriate report. So when I am supposed to issue qualified, I should issue qualified. I cannot issue adverse. So what is that appropriate? What is my consideration? That's what essay 705 is going to talk about. Now, which type of opinion, when should I give? That depends on what? Please understand, both are two. They can ask you in the examination for 1 mark. Types of opinion means there are 3 types. Category, group. Now, which one should I select? Because at the same time, I cannot give 3. I have to give one among the 3. I have to make a choice now. So, which one I will choose depends on what? It depends upon 2 elements, 2 components, or 2 factors. Factors are something which influence our judgments. One, nature of the matter, whether it is material misstatement, okay, whether the financial statement is materially misstated, or I am not able to obtain evidence that it is not materially misstated. Are you clear about this? So what is that first thing? Materiality. One of the factors you consider which type to give is materiality. But is the materiality only defines it? No. There is something called pervasiveness. That is also I am going to consider when deciding. So 2 factors will decide which type of opinion I am going to issue. Now, what is pervasiveness? We will see that as we proceed further. What is the objective of this standard? Express appropriate opinion. Appropriate means which suits to the circumstance. That means either disclaimer or adverse or qualified. Which is that thing I should be issuing? Okay. Need the appropriate opinion when the auditor concludes based on the evidence obtained that it is not free from material misstatement. That means, see, I have got an evidence. I perform procedure, I got an evidence, and I know that it is not free from misstatement. If it is free from misstatement, I would have given clean opinion. Or I am unable to obtain evidence and that they are free from misstatements. See, this is the positive thing. That means you got an evidence and you know that there is a problem. That is a negative. Because you need to learn this language. You may have to write in the exam. So it is very easy to remember with this particular technique. You see here, what they are trying to tell? Auditor concludes that you got an evidence. So getting evidence is something positive. And evidence is what? There is a problem, that it is not free from misstatement, negative. Second, the auditor is unable to obtain evidence. This is negative. You are not able to get evidence. What? That it is free from misstatement. Don't write they are not free from misstatement. Please understand, you may lose 1 mark. So you may actually fetch 2 marks if you write this properly. It's very easy. So you got an evidence and the evidence is there is a problem, or you didn't get the evidence that there is no problem. I hope it's clear. You can remember this. Now, circumstances when this modification is required. Okay, either you should be getting that only 2 circumstances, that you got an evidence and there is a problem, not free from misstatement, or you are not able to obtain evidence that it is free from misstatement. Only under 2 circumstances you have to issue. See, there are students, please understand, there are different things here. They can ask you for 1 mark. They can simply take your mark. When they talk about type, you have to say there are 3 types. If they talk about circumstances, when you will issue modified opinion, there are 2 types of circumstances. You got an evidence that there is no misstatement, there is misstatement, or you didn't get the evidence that there is no misstatement. And there is one more thing, which factor will decide which type? There are 2 factors. Materiality, pervasiveness. I hope you are clear. Got evidence that no mistake, that there is not free from misstatement, or no evidence that there is free from misstatement. So there is one thing called a type, one thing called a circumstance, another is called a factor which decides the type. See, there are 3 different components to it. Now, in the examination, what exactly they ask, you have to be careful. Let us see one test your knowledge 10. Now, CA Omkar is a statutory auditor. Company is engaged in the business of floor tiles and all. During the course, you obtained certain evidence which were not consistent with the affirmations made in the financial statement. Okay, you see the language in which they are telling you. You obtained certain evidence that they are not in line with the what affirmation. What is affirmation? Assertions made in the financial statement. Discuss how Omkar should deal with the situation in the auditor's report. See, how did you figure out now which chapter it is? The first thing they are talking about the auditor's report. The auditor's report is going to be very clearly SA 700, reporting section, chapter number 7. And in chapter number 7, what they are going to talk? See, they are telling you got evidence that there is material misstatement. So how do you deal now? You are going to say that we are going to consider the circumstance, because if we got an evidence that there is material, there is not free from misstatement, we are going to give the modified opinion. So you have to talk about objective responsibility. Then you say, you decide, this is how we decide using materiality and pervasiveness, we decide which type of thing, and there are 3 types of things. You can tell like this. So you can give either qualified opinion or adverse opinion. Why the question is very silent, whether it was material or whether it was material and pervasive. But one thing is, you are sure, you are going to say that since they asked you how do you deal, you said you are going to issue the modified opinion. You can make an assumption. You can make it, because it looks a very simple question, but they are not going to ask you like this. They may tell you, give you some sort of hint there. What type of pervasiveness was there, or materiality was there. Then accordingly you may have to conclude. So has obtained evidence, he may have to modify the opinion. Yes. Now, determining the type of the modified opinion, already we discussed. Primarily, there are 2 elements. Auditor, having obtained sufficient appropriate evidence, concludes that misstatements are material but not pervasive, or you are unable to obtain evidence on which you base the opinion whether the possible effects are material but not pervasive. Okay, this is when you give qualified opinion. So, qualified opinion happens when you got evidence that there is material misstatement, but it is not pervasive misstatement, or you didn't get evidence, no evidence. What is that? That the possible effects, and you feel that the possible effects must be material but not pervasive. Yeah, I think in the intermediate this must have happened. So you have to practice this when you give the qualified opinion. So they can see, one is, how do you decide which type of opinion you will give? You have to talk about this answer, because this will decide which type you will give. They can specifically ask you, how do you decide whether to give qualified opinion or not? Then you have to tell, explaining this too. You got evidence, you didn't get evidence. I hope you are clear, students. And adverse opinion you should give when you got evidence, obtained evidence, but they are pervasive also, material also. Here in both the cases they were not material, not pervasive. Disclaimer is you are unable to obtain evidence and the possible effect is material and pervasive. Okay, so auditor shall disclaim the opinion extremely in rare circumstances. See, that is when, see, first of all, when you explain, give the disclaimer of opinion when you are unable to obtain. So there was one chart also before, you may come across that chart later. Okay, we can just summarize something like this. You obtained evidence, not obtained evidence, material but not pervasive, material and pervasive. Now you obtained evidence, but it is material but not pervasive, you give qualified opinion. You didn't get evidence, but you feel that it must be, possible effects must be material but not pervasive, qualified opinion. You obtained evidence, it is material and pervasive, adverse opinion. Not obtained evidence, but you feel material and pervasive, disclaimer of opinion. So this is the famous chart which is going, we are going to come across also. This is the matrix for you to decide what type of opinion to be given among the three types. Now, if you see this particular bracket, there should be only one permutation combination. That means something is pervasive and material and you didn't get evidence. No, there can be another thing which can happen where in the rare circumstance, multiple uncertainties can happen. Having obtained sufficient appropriate evidence, now each of the individual uncertainties is not possible to form an opinion because of the potential interaction of the uncertainty. Okay, I can say something like this, like a big brain related some problem has happened or big heart related problem has happened. Now if you go and ask the doctor, you are very eager to hear to the doctor in the same, like, okay, I can bring that example here, this example. I can say instead of faculty is a doctor and these are all the patient's family members. There is a patient there. Okay, see what patient's family members would like to hear, always clean, no problem, fantastic. This is what they want to hear. Everything is fine except okay, manageable. But if the doctor says no, impossible, no, this is gone case, Are Baba, people will be afraid. Or sometimes they may say, I don't know anything, let us pray God, I cannot tell anything. See, these are all the different types of opinion they give. Doctors also give. Correct? Now, there is one different catch with the, I can't say, because doctors really not able to figure out and they feel that there is something very big thing now. Then they give disclaimer of opinion. Disclaimer is given, I don't know, okay, what exactly is the problem. You please pray God. That means the doctor is not able to figure out what is the problem and it's something like life-threatening. Life can be in danger. But there can be another circumstance when the doctor cannot say, I don't know, I cannot tell anything. When it's not that you didn't get evidence, you got an evidence that liver is not functioning. You know that kidney has stopped working. You know that heart is become weak. Then why did you say you cannot say anything? You have got evidence for the individual problems, but how they are going to talk to each other, that interactions, we call it multiple organ failure. You see, when the multiple organ starts to fail, doctor gives the same disclaimer opinion. They say, I cannot tell now anything because your different organs are failing and how they are talking to each other, I cannot say. Same story in the financial statements also. That means, see, first thing, you don't know anything about that financial statement. You have been prevented from obtaining evidence. Yes, you give disclaimer of opinion. But there can be something, sometime, no, you saw that the debtors have gone for a toss, your registered sales is gone for a toss, your fixed assets are there. Like individually you got evidence, but how they are going to interact with each other, you are not able to imagine it. So it is not possible to form an opinion Considering the potential interaction of the uncertainty, there's a lot of uncertainty. You didn't get evidence, you got evidence. That's what they say. This happens extremely in rare circumstances. That multiple uncertainties you obtained an evidence. There is a litigation also there. There is going concern is also happening here. Okay, there is something related to the estimation uncertainty on some particular portion. The customer is about to leave. Now you see 4-5 uncertainty. You got evidence. You have hired a lawyer. You have gone through their work. You have performed substantive procedure. But how they are going to interact with each other, I cannot say. I hope students this part is clear. Now, drafting of the disclaimer of opinion. See, very important. I told you in final, at least this chapter is very important. Majority questions will revolve around 705. Then we can move faster. So, whenever you are going to disclaimer of opinion, later we will come to know. See, if you feel that you have to give disclaimer of opinion, when you have to give disclaimer of opinion, when you are prevented from obtaining evidence or you didn't get some evidence at the statement as a whole, big level. The standard says first resign. Don't stay there. Always, if the moment you feel that you end up giving disclaimer of opinion, you resign from that engagement. But don't stay till the end to tell that I don't know anything. Resign if permitted. Okay, we'll see when we are not permitted. If you cannot resign, if you are not permitted to resign, then you give disclaimer of opinion at the end. So what is that you should start with? See, always we say in all the 3 types of opinion, clean opinion, qualified opinion, modified opinion, we will always start our opinion section. We have audited the financial statement of ABC Limited. But for the first time, we are going to say we have been engaged to audit because we never audited it. If it would have been audited, we would have been in a position to tell you. Followed, no? So we have been engaged to audit. This is one thing. Then you can identify the financial statement items, profit and loss account, balance sheet, cash flow, notes to accounts, etc. Then you say that we do not express any opinion on the financial statement of the entity because of the significance of the matter. Just like we say, no, we in our opinion, to the best of in our opinion, the accompanying financial statement show true and fair view. We don't say like that. We say we do not express any opinion because of the matters discussed in the basis of disclaimer of opinion section, because we are not been able to obtain sufficient appropriate evidence for the basis of, as a basis for the financial statement. Okay, at the end I will show you, students, one chart which will give you a very clear picture of how this standard has been designed and how many changes. See what they have done, no? In SA 700 they have spoken about the elements. Now in SA 705, since it has got 3 types, they have discussed only changes. That's why you may get a bit confused. At the end, we will go back again and we'll have one comparative. You see how much clarity is going to emerge with that. Okay. So let us see only in bits and pieces. We'll try to learn. We'll try to learn the words, what they're trying to tell. What is the meaning of those paras? We'll try to focus on that. And I wish students, please tell me in the WhatsApp if you are not able to understand something. I can see, I can talk to you immediately. I feel very good when you ask me questions. Okay, yesterday somebody asked me framework question. Okay, and the person asked me on the SA 402, your what is that called, complementary user control. See, when you ask me, no, it will really help me also to go more deeper, because I love to go to the depth, and it's going to definitely, it's going to help you also, because the moment you understand one word, your lot of possibilities will open in your mind. You will understand things better. Okay, just to give you an idea, student, just to tell you one concept. See, our education system till now, how it was designed on what it is. Very one page. How to do 10 page. Correct? What is it? Only one page. How to do it? 10 pages. But because of AI has come, that requirement of how to do will be changing now in upcoming years. So I am also giving one advice to all of you. In the future, from now, right now, from today, right now, at this point of time, 7:47 right now, you have to more focus on what it is. Why? You need not see how it is, how to do it, because how somebody else will take care from now onwards in your life. But you have to focus more. That means now the education system has to change. How should be maybe only 1 page? What should be 10 page? That's why that what will come when you ask me a question, why? What is this? Why it is existing? So please ask question to yourself. Please ask question to me. I feel very good when you ask me questions because you are by default inquisitive person by your very nature. And in our profession, that inquisitiveness is very much required in the form of professional skepticism or your whatever. Okay. So let us see test your knowledge 6 and test your knowledge 1 question. AKDS is a newly appointed statutory auditors. Okay, so they are newly appointed. So your mind will take you to SA 710, 510 opening balance comparative. We don't know. During the course, the auditors have come across certain significant observations which they believe could have material misstatement of the financial statements. Okay. The keyword will be material misstatement of the financial statement. Management is of different view and does not concur with the view of the statutory auditor. That means they are not agreeing with you. So can I talk about SA 450? Because I have figured out, I believe, that means I have not obtained evidence. Okay, so 450 I can remove, but you see the keyword believe that there is a material misstatement. I can say that this you can see only in SA 705. From this chapter number 7, concept number 3 should strike to you. Considering the statutory auditors are determining how to address the observations as per their reporting. See, with these 3 things, believing that there is a misstatement, you wanted to report, please advise. Now you need to talk about, you can start with the objective of SA 705. Okay, you can tell about types of the opinion. See, you figure out the way of answering. You can say when the modified opinion has to be issued, how many types are there? There are 3 types. How this has to be applied for which type? So you explain now. Okay. So in the extremely rare circumstances, I might have obtained evidence, but still I may give disclaimer. Now management put a limitation on the scope. You should request the management to remove the limitation. If management is going to refuse, you have to put alternative procedures. Like why you are talking about limitation? Because their management is not concurring. They said they do not concur. So you have to make an assumption that they must have stopped you from asking. You didn't get evidence. Why? Because they must have stopped you. See, this is the assumption you have to make here by looking at the answer. Follow? No, that's why I marked it as a priority 1, because this particular component is something extra here. But in the question, you see that there is a problem that they are not concurred and all. I don't know how they are going to ask in the exam. Now you may be awarded 1 mark just to quote this, that management has put a limitation, what you are going to do. Now if you are not going to write, they will give you 0 mark, but they will not tell you why you are not written. So that's why you may not have written something, what they are expecting you to write. Then how do you know, sir, what is their expectation? You see no here. First of all, they have given in the test your knowledge. At least you should have remembered this. At least you will definitely remember. 1.5 days before the exam you are read. You see the context here. That's why students, final is different. We have to write the context. First of all, no concept of half mark. I think I have told you. In intermediate, you just write the word material. You will be awarded half mark. But you have to write the proper context here. You write in your own language. Use keywords and write, communicate to your evaluator what you are trying to tell. Then only you will get full 1 mark. So the question is either 1 mark or 0 mark. No half mark concept in CA final audit. Yes, so I hope you are clear about this. Now, under the applicable standards on auditing, in what circumstances does the report of statutory auditor require modification? Very easy. Okay, so 705 you are going to tell. What circumstances? You are going to say 2 circumstances. What are the types of modifications possible to the said report? There are 3 types. 1, 2, 3. 1 mark for this. Now, circumstances, 1 mark. Did they ask you determining the type of modification? No. If they ask you, you can write this, or you can explain this applicable to each. You can write this para also. So that you decide in the examination what to write. Okay. I hope it's clear, students. Now comes one question. Pervasive. Because we have been talking material and pervasive. What exactly you mean to say pervasive? See, pervasive if I have to talk about the word of pervasive, very first thing strikes to me is God, because we say God is pervasive. What do you mean by pervasive? You know that story, right? That Kanakadasa was given, Kanakadasa and all other people were given, somebody, I think, yeah, it's Kanakadasa. They were given one banana and they said, go and eat where nobody is there. Everybody finished, but this Kanakadasa came with banana. Then that guru asked, why you didn't eat this banana? He said, sir, where to eat? I can see God everywhere. Beautiful. You see, God is there in this pen also. God is there in the air also. God is there everywhere. Huh? That's the concept of God. If you say God is not there, God is nowhere. So leave it. That's a matter of belief. But if you see, we can say God is pervasive. What is pervasiveness? Present everywhere. But do you believe in this concept? No. There can be two types of theories here. Okay. One, that Dvaita Siddhant. Another is Advaita Siddhant. In Dvaita Siddhant, they say that, look, Baba, I am different, God is different. So God is, God is in this place where you say there is a temple. In my house, there is one God's room, whatever, where you specify a place and you say God is not everywhere, God is there only. That's their belief. In Advaita, you say, no, Baba, God is there, every element, every component, God is there. Now, let us apply this concept in the audit. You have got a balance sheet. Now, what is material? What is pervasive? Pervasiveness is something everywhere. Now, that pervasiveness can take two forms. Okay, before this, I will tell you one small story. I'm not recollecting the name of the movie, students, but there is a very fantastic movie on gold mining. Okay, very earlier. Okay, this happened somewhere in the USA. One company, some mining company, took one mining rights in Indonesia. Okay, a movie also had come on that. Now, what happened? No? This all came because of the plan of one archaeologist. Archaeologist came with one idea that in Indonesia, so and so place, there is a gold. Now, what happened? They took the mining rights and all, and the initial exploration they wanted to do. And during initial exploration, they found out that the gold reserve is nothing but, say, 10 ounce of gold is there. Oh, very good. Everybody is happy. Then the moment this information went to the market, share price shoot up. Then within next year, when they did more exploration, they figured out that this is not 10 ounce, but that is 100 ounce of gold. Okay, that means big quantity. People became mad about the shares of this company because we say, no, you found one gold mine. And later again, they figured out that it is not 100 ounce, it is actually some 500 ounce of gold is there sitting in that gold mine. And who is that called? That consultant firms and all, they said this is the biggest discovery of the gold mine ever in the human history. The share price went up like anything. One fine day, the archaeologist who was behind all these things fell from the helicopter and died. Next day, the lab which had all the preliminary extraction related data, it got burnt. And later it was found that actually there was no gold only. These people were manipulating. They were telling that, okay, it was all the fake news what they created. And the share price started to fall down. It crashed actually. The company got closed. Now, why I am telling you this example, students? Because if I have to go, it's called K mine or something. I don't know. Let us assume that K mine is the balance sheet, is a company name whose balance sheet is like this. You tell me, what is that one item every investors are looking for? That is the gold reserve. Gold reserve. Now, this company may have actual bank balance of 10 crore. or 100 crore. Actual bank balance is 100 crore. But the day they figure out that 5,000 crore gold reserve do not exist. Now tell me, who cares for cash balance of 100 crores? Debtors, equity or fixed assets? No, this balance sheet has collapsed. This balance sheet makes no sense to you. So this is pervasive. Why? Because there is one big item which can substantially influence your decision. You don't care any other thing. I can say something like this. In a human body, okay, there is one item like a brain. Brain only has got a problem. And we can only say pervasive. No? Your problem is not at different places. Your one place only there is a big amount. Like I said, no, God. God is there in the temple. One place only you show. This is the important thing. God is not everywhere. This is one place God is there. So alternatively, you may have problem here, you may have problem here, you may have problem here, problem here, problem here. So in this case, what happens? Okay, you have got a problem with the stock. Everywhere there is a problem. So cumulatively, we call it pervasive. That means you have got a problem everywhere. Every item of the balance sheet, you have got a problem. That means this is that. Otherwise, that God is everywhere now. But it's not that one item. It's not in the gold reserve, in the bank balance, in the security deposit, in the equity, in the loan, everywhere. So you have got problems everywhere in the body part. That is also pervasive, no? I hope it's clear, students. This example is clear. Okay. Now there is one more thing called fundamental disclosures. Okay. You have not told certain things about you only. That is also pervasive. You see, no, like somebody comes to know some truth about like Karna. Karna was not knowing from the childhood. He was thinking that he is the son of those two people, like the chariot person. But one day, Krishna comes and tells, "Arey Baba, you are Kunti's son." Can you imagine the shock of his life? What he can have? Why? Because that's very pervasive to him. Because it changed the course of the Mahabharata war only. Because one small revelation, no, that you are Kunti's son. He says, Krishna, you killed me, no? He says, oh Krishna, by telling this truth, you killed me actually. You see, from then see, Krishna sends Kunti, asks some this thing, fantastic plan, whatever. See, something fundamental disclosures can be also very pervasive. Okay, now let us read what our standards are telling. What is pervasive? So when we talk about the pervasive terms in terms of misstatements, effect of the misstatements or the possible misstatements, we can say they are used to describe the effects of on the financial statement or the possible effects. Effects or possible effects means you got evidence here, you didn't get any evidence. If they are undetected due to inability to obtain, that means if you are not able to obtain evidence, then you will talk about the possible effect. So what is the possible effect on the financial statement? Okay, pervasive effects on the financial statements are those that in the auditor's judgments are not confined to specific elements, accounts or items of the financial statement. That means it is not one item, it is every item. That is pervasive. Like God is pervasive everywhere. Or if you are confined, that means if you are telling, no, sir, God is not everywhere, God is here only, then it should represent or could represent a substantial portion of the financial statement, like example of that gold example. Or in relation to the disclosure, like what Krishna has told to your Karna, very fundamental to the user's understanding of the financial statement. You are not telling these financial statements are done as per accounting standards or your Ind AS. You are not telling whether the financial statements are prepared on going concern basis or liquidation basis. Is it not fundamental? If you are not going to tell that, then your pervasiveness comes into picture. That's why students in going concern, no, when going concern becomes inappropriate, we always end up giving adverse opinion because it's pervasive, no. So pervasive, therefore, is what is not localized to one or two elements, but it has got an impact on the various elements. For example, if sufficient appropriate evidence is not available on inventory, but elements of properly supported by documentary evidence, the non-availability of information of inventory is localized to the possible misstatements, but it has got no impact on other elements like trade receivable, PPE, etc. Then what we do now, we end up issuing qualified opinion, because we say this is not pervasive, because the problem is only with the inventory. So we say that except inventory, everything is true and fair. But if you are not able to figure out that inventory is a problem, trade receivable, okay, so many problems are there, then we end up issuing the disclaimer or adverse. Therefore, it is necessary to ascertain the impact of misstatement, whether it is pervasive or not pervasive. Okay. Now, what about the management imposed limitation? After the auditor has accepted the engagement, in essay 210 also we spoke the same step, same content, but that is before accepting the engagement. Now, this is after accepting the engagement, but answer is same. After accepting the engagement, if the management has put any limitation on the scope, you need to express qualified or disclaimer of opinion, because you got no evidence. And possible misstatement, you may think material but not pervasive, or material and pervasive, disclaimer. So if you feel that you may end up giving qualified opinion, step number 1, first thing is request management to remove the limitation. If they remove the limitation, then you need not go to the point number 2. What if they disagree? If they refuse to remove, then you have to communicate to this matter to the TCWG and check whether you can perform alternative procedures, because if you are not able to obtain evidence by this way, can you obtain by this way? Third, if you are able to obtain alternative evidence, matter is closed. But still you are not able to obtain alternative evidence, then you have to evaluate whether the possible effects are material but not pervasive. If then, you have to qualify. But if it is material and pervasive, first thing, you have to withdraw from the engagement. Means don't wait to give disclaimer. This is what standard says. See, the moment you feel that you may end up giving disclaimer of opinion. Why? Because management has stopped you. You are not able to perform alternative procedures. You communicated to the TCWG but of no use. And you feel the effect is material and pervasive. Then first you withdraw from that engagement, and if it is not possible as per the law, we will see when it is not possible as per the law, you have to, if withdrawal is not practicable, you have to disclaim the opinion. So very important, students, in the exam they can ask you this. So we can say there are 4 steps. First is request, second is communicate, third is alternative procedure, fourth is modification. So there are 2 types of modification. I hope it is easy. Yes. Now, MTP July 25 will see one question. All-in-One is a large departmental store appointed Kabir as the statutory auditor. After accepting the engagement and performing procedure, he noted that the management has restricted his access to key inventory records. See, this is the keyword for you, because this particular thing has been discussed in chapter number 7, management imposed limitation. And other than this, you see in your chapter number in your intermediate also we have got this. Now they restricted you. These limitations are likely to prevent obtaining sufficient appropriate evidence relating to significant balances. Now whether they are material or pervasive, we don't know till now, but somewhere you understood it is chapter number 7, concept number 3. Kabir requested to remove the restriction. That means again you go and need not go and tell, okay, request and all. But the management refused, stating that the information is very confidential and sensitive. You have communicated the issue to those charged with the governance, but the restrictions will still remain. What are the consequences of this management imposed limitation on the opinion? See, student, at this point of time, since they already told you what you did, that you requested. So tell me, writing this will fetch you any mark? I don't think so they will give you any mark for writing this. Why? Because in the question only they told, no, that you went and asked. If you would not, if the question was up to here and they ask what you are supposed to do, then you should say request management to remove, 1 mark. Communicate, if the management is going to communicate to those charged with the governance, 1 mark. But tell me, will these 2 points will fetch you any mark? I don't know. So let us make an assumption, because ICA has never given the mark allocations there, how they are going to give the marks. So we have to make one very basic assumption here, that since in the question only they told these 2 points, they may not give me any mark if I write, but anyhow, you write. But they are asking consequences of this limitation on opinion and what action should you take as an auditor in response to the limitation. So primarily you should be writing this element. This element you need to write. Because if you are not able to obtain evidence, I am going to issue the qualified opinion or modified opinion, and I may withdraw from the engagement. Okay, this is the second part. If auditors decide to withdraw, I think this MTP I should have brought it here, because this is the action. What action you can take now? Okay, you can take an action of withdrawing from the engagement. This is the action you can perform. So you may think of withdrawing. Management improves limitation, so you should take the action mentioned above. So when the auditor decides to withdraw from the engagement, he should communicate the matters regarding the misstatements identified. And this is very similar to SA 240. In 240 also, because of the fraud happening at different places, it may be possible that auditor is not able to continue the engagement. What you should do? First you should communicate the matters identified with the TCWJ, and then you may have to decide to report whether you have got a reporting requirement. Okay, you see whether can you resign from the engagement, whether the law permits. And last thing is the documentation. There were 4 points. You can write same thing here also. This is one of the 4 points here. Okay, now one very important, mark it very important, very important. When auditors withdrawal is not permitted, because they say here, no, first of all, if you end up giving disclaimer, first you need to withdraw. If it is practicable and possible. When it is not possible for you to withdraw, now you need to understand one circular issued by SEBI about the resignation of the auditors. Okay, in that circular, you need not quote the circular number. You can say that SEBI has issued a directive or a circular, putting restrictions on the resignation by the auditor. Now, what they say that if the auditor proposes to resign, that means somewhere in the mid of the audit, you wanted to resign. See what happens is you must be, and this is applicable to the listed entities. Okay, it is applicable to listed entity because SEBI will come into picture. Otherwise, non-listed entity, it will not come. That's why it's as per the listing agreement and SEBI directive. Now, in between the audit of a listed entity, if you wanted to resign, so what you should do? If you resign within 45 days from the end of any quarter, because you have got a responsibility of quarterly reporting, quarter 1, quarter 2, quarter 3, quarter 4, and for you, Ind AS 34 is applicable, quarterly reporting, interim financial statements. Now, if you resign within 45 days from the end of any quarter, then auditor shall, before such resignation, issue the audit and limited review report for that quarter. I'll explain you with example. If you resign after 45 days, then you should issue an audit and limited review report, audit or limited review. This is that limited review, interim financial report. Such a quarter also as well as next quarter also. Because already you have spent substantial time. See, 45 days you have spent. See, now you cannot simply resign and go, no, because another auditor has to come now. Now again they have to go through the first quarter data. They don't know anything about your organization. Reporting gets delayed. That's why SEBI told, look Baba, whatever you want to report, no. Why you are resigning? You want to give disclaimer of opinion, give disclaimer and resign. You want to give adverse opinion, tell very clearly, but don't keep it on hold. Because what happens? See, already 45 days you have spent or 30 days you have spent. See, we cannot afford to bring another auditor and they will study that quarter data, and because already quarter has expired from the end of the quarter, that means already 3 months you are there. So say quarter 1 will start from when? April to June. 3 months so you are there. Afterwards you try to resign now. After the end of any quarter, 45 days within the end of the quarter, that means from 1st of July your time starts, 14th of August. Are Baba, you are there. Already you know, no. So please issue limited review report for that Q1 and then you go. But if you have spent more than 45 days, that means next quarter's 1.5 months you must have spent. Quarter 2's 1.5 months you have already spent now with this client. Then you issue previous quarter also, next quarter also. And they say that if you are resigning after issuing limited review for 3 quarters, then you should issue the audit report for the full year and then only you should resign. And what you want to resign, you resign. But you don't you tell in the report, but don't resign without issuing the audit report. Are you clear about this, friend? Okay, so remember this particular table. So I have drafted like this. So we have got 4 quarters. Okay, quarter 1, quarter 2, quarter 3, and quarter 4 will always end up with your financial year end also. So if your resignation date happens to be, say they said 45 days, no, on 14th August, because 30th June is the end, quarter end. From 1st of July, 45 days comes to 14th August. So if you are resigned till 14th of August, you have to issue audit report for this and then go. Then it is their headache now. On 15th of August, they have to hire new auditor. They will report on Q2. But if you are resigned on 15th of August, just one day after that 45 days, you should issue for Q1 also and Q2 also, because Q2's 1.5 month you have already spent now. It's just 1.5 month is remaining for 30th September. Similar story goes for September to 14 November. So if for 14 November you resign, you issue for Q2 because you must have already issued for Q1. If 15 November, then Q2 and Q3. And now, after you have issued, the moment from the 15th of April, 15th of November, it really doesn't matter. Why? Because they say the third element gets attracted. If you have already issued for Q1 and Q2 and Q3, because if you resign from 15th November onwards, you will definitely see Q1 to you have already issued, Q2 and Q3 also you are supposed to issue. Then they say that you have to issue for Q3 also, Q4 also, final also. That means 15th November is the last date, so 14th November is the last date, friends. If any auditor do not wants to audit the full year financial statement, then they have to resign within 14th November. If they resign after 14th November, then they have to audit Q4, Q3 also, Q4 also, full year also. I hope this statement is clear. Now, one more thing ICS said. ICS made an announcement that auditor of an unlisted company, okay, now this is applicable for listed company, should not mention professional preoccupation as a reason for resignation. You should mention the reason very clearly in the resignation letter. Now, you are trying to become very diplomatic, okay, due to my professional reasons. Okay, so like I also say, no, I am not able to take the class today because of some personal reasons. See, that's a very diplomatic way of telling the way. No. They say that you have to bring clarity why you are not able to conduct the audit, like why you want to get out of from this audit. At least the incoming auditor has that idea. Let them know. Let us highlight this. Don't be too much diplomatic and don't say professional preoccupants. Tell the real reason. Okay, so I hope it's clear, students, up to here. Now, other considerations relating to the adverse and disclaimer of opinion. Okay, let us see some of the other considerations. Now, when the auditor considers necessary to express an adverse or disclaim the opinion, he shall not also include unmodified opinion with respect to, very important, same financial reporting framework on a single financial statement or one or more specific elements of the accounts on such statement. To include such unmodified opinion in the same report in the circumstance would contradict auditor's adverse or the disclaimer of opinion on the financial statement as a whole. What is that they are trying to tell? Very important, students. Please understand. Later we have to see this. In essay 800 series, no, we are going to talk about this. What they are going to tell you, they are telling like this. See, your opinion is on the financial statement as a whole. What you are telling? Entire financial statement is not true and fair. Or I am not able to express any opinion on the financial statement as a whole. So you may end up giving disclaimer of opinion or adverse of opinion. Like I may tell about the student is not good at all. Or I may end up telling, I cannot tell anything about the student. This part you are very clear. Now what can go wrong? What can happen here? Management may request or the student may request me, sir, when the parents are going to tell, you tell that I am not good. I don't have any problem. Or you tell, I don't know anything about the boy. I don't have any problem. But in the classroom, okay, I was coming. I always attended your classes or I was listening to your classes or whatever homework you did, I have done that homework. Can you please tell me, can you please tell my parents that I'm very good in doing homework? Now you tell me, students, can I tell that? Can I tell that? No. I have to straight away reject. Because see, for me, student, you doing one particular element is not that important. There are so many things you are supposed to do. Because for me, you as a whole is important. There are so many components has to be done. Only one particular thing you do, that makes no sense. So many other things also supposed to be done. This is what exactly they say that, because tomorrow bank management may come and say, look sir, did you audit inventory? Inventory was 50 crore. Is inventory true and fair? Inventory is correct. You have given me adverse opinion for the gold, right? Gold is not true and fair. It is adverse, and you say financial statement as a whole is not true and fair because of the pervasive effect. You certify except gold, everything is true, no, not good. Gold is true and fair. Sorry, except inventory is true and fair. Why? Because I will keep this inventory, I will show this annual report to auditor's report to the banker, and will take a loan on this inventory. Now, can you give such report? The answer is big no, because if you have expressed the opinion on the financial statement as a whole that it is adverse or disclaimer, you are not supposed to give unmodified opinion on single financial statement. That means you cannot say balance sheet is, financial statements are not good, but your cash flow statement is correct. That is called single financial statement. P&L, balance sheet, cash flow. These are all called the single financials. You cannot say everything is fine, P&L is, everything is not good, P&L is good. You cannot say that. Or one more specific elements like fixed assets. You have got debtor statement, inventory. You cannot express any opinion on that, unmodified opinion. When it's possible, if you are audited under a different reporting framework, then it is possible. So what you are trying to tell? See, this is the financial statement you are supposed to audit, okay, as per Ind AS. This is the financial statement you are supposed to audit as per US GAAP. Tell me students, is it not the same numbers which will flow into two financial statements? But the way you are going to account under Ind AS versus US GAAP may be different. So, the gold has been accounted differently in the Ind AS, and it must have accounted differently in the US GAAP. Say, for example, again, just an example. Now, in that case, what you can do, you can give a disclaimer or adverse opinion here. But since this is correct, as per this framework, you can give clean opinion on this financial statement. But you cannot have a single audit report. You need to have two audit reports. One audit report on the audit under Ind AS, where you say we are going to disclaim the opinion. Another is audit under US GAAP, where you say our opinion is clean on this financial statement. That's why framework is very important, students. See, it is not that you say we have audited the, because management can fool you. Management can make you to sign two audit reports under two different frameworks. That's why whenever you tell we have audited, are you not telling under which framework you audited? You see here, you are going to tell exactly this is the accounting standards we followed. Okay, this is the principles we followed under Indian Banking Regulation Act. See, you tell that because it's the same financial statement can get audited under, can be two frameworks. No, you could have under US GAAP also, under Indian accounting framework. So when you say we have audited the balance sheet, you cannot simply of those so and so entity, you need to tell the framework also under which you audited. In such cases, you can actually issue disclaimer opinion on one framework, on a single financial statement you can give another type of what is that called, opinion. Are you clear, students? Yes. Now, form and content of the auditor's report when the opinion is modified. Okay, we will stop here. Yeah, because from now onwards we have to, there is a big thing, lot of Q&As also will come, we will take time. Yeah, what I want to, I want you to have a plain reading, students. I have already shared the material with you. Before you come to the evening class, please have a one plain reading here of what we are discussed and what we are going to discuss. Okay, because we need to have a very good clarity. These wordings and all you have to practice. Let us see the Q&A, how they will ask you the questions. Okay, how do you identify this from which chapter? Okay, what is the catch there? We will try to see. So we will meet in the evening class.